CME. And Bob, it looks like the futures are under a little bit of pressure. How much of that is because of the concerning news out of China, where inflation looked like it was hotter than expected?
Well, that's certainly the short-term catalyst, Becky. You know, I've been talking about being a buyer of dips short-term, and then longer-term, I had some concerns about the market, and I've actually switched. I've bought every single dip in the equity markets that's happened over 2011, and this is the first one I'm not sure I'm going to buy yet. Friday has a consideration to it. It's the beginning of the quarter. We're still in the first half of the first month of the second quarter. Everyone had good quarters in the first month, and the 1307 area of the S&P concerns me for a daily settle below. If we get a daily settle below that, that whole buying dip strategy that I've been doing all year goes away for a little while.
What's different this time about other times, though? What has you so much more concerned?
Well, it's really a strategic trader talk, to be honest. 1307 is a level that triggers a little bit of a technical cascade effect, possibly all the way down to 1235. Now, fundamental traders, earnings-based traders, can all build a base higher that I'll then join in on. But as of right now, if we can close above 1307, I'll come in on Monday. I have not bought dips on Friday, to be honest. I have not bought Friday dips. I never do. But I'll come in on Monday and join the buyers again. But if we get a settle below 1307, that gives me a little bit of pause. There'll be some black box systems. There'll be other technical traders that will pause as well. And that could stall the market a little bit. Better earnings. We're in the middle of earnings seasons. Better earnings can build that base somewhere a little higher, which will bring me back in. But I've got pause for the first time this year.
All right, so you're going to be watching some of the numbers like the Bank of America numbers that are out in about 20 minutes.
Absolutely, along with the CPI. I mean, the Fed's starting to turn to a little bit tighter of a monetary policy. In my mind, is going to be the move, the catalyst for that correction that the market actually needs. I feel like we need 10%. We're getting to the point where it's more and more difficult to buy it as we rally and as we rally. You buy it and you hold it shorter. You hold it for shorter durations. You hold it for a week, for 3 days, for 2 days, as opposed for 10 days, 2 weeks, 3 weeks, which is what we were doing at the beginning of the year.
So a lot more volatility?
Yes, a lot more volatility coming, definitely, especially because analysts' expectations have been bumped up a little bit for this earnings season, which, you know, just theater of the obvious gives us a little bit more room to disappoint for some of the earnings as you're seeing right now. So, again, there's going to be more volatility. In terms of the medium-term outlook, if the Fed can manage this crisis, everything's going to be fine. The economy's recovering. I believe the consumer's running back. I'm not even terribly concerned about oil until it gets above 115, 120, because I feel the consumer, through the recession, has started to adjust a little bit. But the earnings disappointments, along with some of the technical levels, gives me some short-term concern.
Okay, Bob, thank you. Have a great weekend.